Okay, peeps, welcome back. So today we're going to be going over our buy, sells, and dividends for the week. So with that being said, let's get it. Okay, so we're going to start with M1 Finance here. So on M1 Finance, there have not been any transactions, no buys, no sells, anything like that in the last week. As you guys know, the market has been really tanking pretty hard, and yeah, it's not great. So we want to build up our cash position just to make sure if it keeps tanking, we have plenty of money to buy the dip. We are still buying dividend-paying stocks, but just currently buying at a reduced rate because, again, we don't know if this is the start of an actual bear market or if it's just basically a market correction. In my opinion, either way, I think the market has sold off way too fast, way too much. And for that reason, if this is truly bearish seasonality, meaning that theoretically the bearishness should end in September, then I think that we're probably going to see an end to it sooner than that. Which would be kind of weird because usually the markets go down into September, but they could actually go up this year in September because of how aggressive the sell-off is. So anyways, no buys, no sells on M1 Finance, but I'll just simply go over the dividends here. So RYLD, $8.54. TWO, this is a quarterly paying REIT, $16.10. QYLD, $6.37. OPP, $13.81. We don't have this position anymore. We will buy back into it eventually, but we made sure that we sold these shares after the X date, so we still got paid the dividend. So 5 cents from ACP. Again, this is another split. I don't know why M1 Finance keeps doing this. RIV, $17.06. SVOL, 48 cents. BSTZ, 4 cents, $21.70 again from ACP. CLM, $1.09. CRF, 41 cents. And that's it. So that total comes out to $85.65. Now I'm going to go over the crypto portfolio so you guys can see nothing's changed here on the Fidelity account. I mean, I'll say this. I think the Grayscale trusts are looking pretty cheap at this point. I will say that I don't necessarily know that they've bottomed. Again, if the market continues to tank, we see something like a suckers rally and the market goes down further, which I'm not guaranteeing or saying is going to happen. I'm just saying it's a possibility. These could tank even more. So, again, you guys got to understand when we talked about Bitcoin in previous videos, we did tell you that there was a possibility Bitcoin could drop to about 40,000. Okay. And the alts could go with it. That could happen. That did happen in the middle of 2021 during the previous bull run. And we saw Bitcoin hit 75,000 new all-time highs before it was actually supposed to happen. So these prices going lower really wouldn't be a shock to us. So anyways, everything is the same as of right now. When we choose to get back into these, we will let you know. So the native cryptocurrencies, you guys can see pretty much nothing's changed. I'll just go over here to the 1-year chart. We've taken some money out of this portfolio and added some money back into it, depending on the position. But yeah, it's currently down roughly about half. Again, a lot of the altcoins that we have haven't really done much of anything. I'm not saying we're buying dead coins that are not going to do anything. We do expect these coins to moon. But again, we just haven't had an alt season yet. So you can see the positions here: Filecoin, AIOZ, Horizon Dash, Crow, Banker Network, Render, Ethereum. This is not all the Ethereum we have. As you guys know, a lot of the ERC20 tokens require Ethereum as gas, so to speak, to be able to send it to and from. So we have to have some Ethereum on the cold storage in order to move some of these altcoins. So it's actually more than this. But Scale, we also have that. We have Engine. Unfortunately, Coinbase doesn't have Engine as being tradable anymore, so we're going to have to move this out of here. So Litecoin and then Algorand, although most of the Algorand we have is not on here either. Our biggest positions here is Filecoin and AIOZ. So I'm now going to go over the Robinhood portfolio. As you guys know, it's been a bloodbath this last week. Again, I do think the markets are pretty oversold at this point. I would say maximum we have maybe a few more days to another week of downside, and then we're going to see the stock market start to rip. Again, whether it goes to new all-time highs or it's a suckers rally remains to be seen. The yield curve hasn't actually uninverted yet. The SOM roll just started and unemployment just started to rise, so those are risks. But I would still argue that there's still more upside possible for the markets. I don't think the markets are fully topped out yet. I will just say that. And again, the other thing to consider is we're in a presidential election year. So generally speaking, we usually don't get bear markets during a presidential election year. It usually doesn't happen. We saw the pandemic in 2020. That was Trump's last year of his last presidency. That's true. But at the same time, that was in the beginning of the year. And, Biden's bear market in 2022 was in the middle of his presidency term. So and before that, of course, we had Obama. Believe it or not, I did actually really like Obama as a person and as a leader. So if you guys think I'm like, oh, he's a rhino, he's just only for the right, he's some super Republican. No, guys, I tell you right now, I'm not. Okay, I'm a libertarian. Generally speaking, I've always been in the middle. I usually don't side with politics. I just think in this case, Trump is the right guy for the job. At the time, at Obama's previous terms, at that time, he was the right guy for the job. But during Obama's term, there was no bear market. Well, there was in 2008, but that wasn't during a presidential year. Okay, so if we think back in history, basically 2024 is the election year, right? So you got 2020, 2016, 2012, and 2008. Well, you know what? Let's go back in history real quick and look at this because I just want to make sure that I'm actually right about this. So we got to wait for it to load here. I will get into the dividends and the buys and stuff like that on Robinhood here in a minute, but I do think this is important because generally speaking, we don't usually see a bear market during an election year. It just doesn't happen. Again, it's in politicians' best interest to get voted into office for there not to be a recession of any kind. And I will say this about Biden and the Democrats. Okay, even if Biden is trying to endorse Kamala Harris, it's going to look pretty bad on the Democrats and Kamala Harris if we have a bear market this year. Okay. Either way, regardless of whether there is one or is not one, regardless of whether Kamala Harris is better for the country than Biden is, which in my opinion, she's not, she's worse. I think Obama was a great leader. I do not think Kamala Harris would be a great leader. But regardless of that, I do think Trump is going to get elected. So I'm going to go back in history real quick. We're going to take a look at 2008. So this bear market did actually, it started, but technically not during the election year. Okay, the election year was in November. So as soon as Obama entered into office, pretty much right after his inauguration, that was the bottom of the bear market year, or the GFC, as it were, because this month right here, January 2009, that would have been his inauguration after the 2008 election. So the recession was already underway before he even got into office. So basically what I'm saying here is in the last 16 years, there has not been a recession during a presidential election year. It just simply hasn't happened. So anyways, enough about that. Let's get into the Robinhood portfolios. So basically in terms of Robinhood dividends, what we're looking at here is FEPI $108.98, AIPI $73.99, QDTE $56.87. I'm sure maybe you guys have seen, but the QDTE and XDTE dividends for the last week were pretty huge. I think QDTE was like 56 cents and XDTE was 35 cents or something like that. So pretty massive dividends. I was actually kind of surprised. So let's take a look at FEPI. Unfortunately, the prices are down. We're just going to keep doing the dividend capture strategy. The market's going to do what the market's going to do. We're not worried about that. We'll just keep buying before whatever the most front-running ex-dividend date is. So $108.98 here, as you guys can see. Pretty good payout. Can't complain about that. AIPI was actually better, but that also means that if AIPI pays a bigger dividend every single month, it also has to outperform FEPI as well. So otherwise, the share price will keep going down, and we don't want that. So AIPI, $73.99. That's just on 50 shares. So I think the dividend was $1.48, if I'm not mistaken. So QDTE, even though the market has really been falling off a cliff, this one actually has maintained its price pretty well. I'm kind of surprised. Well, I'm not going to say that I thought it would be down more, but I just will say that I think it's pretty resilient so far. So that's good. So $56.87. The next one is SPYT. So this is the Defiance Target Income Fund. This one has also held its price pretty well. Shockingly, the entire market is down like 12%, 6 to 12%. This thing is only down 5%. I mean, that's really not that bad. I mean, that's less than the S&P 500 itself, so that's not bad. $35.35 here. And then the last one is XDTE, which we do plan on adding more to. But again, the single stock yield max ETF dividend X date is coming up, so we're piling into that first. You can see XDTE, or the S&P, I should say, has not been getting hit as nearly as hard as the NASDAQ. So $26.81 here. Okay, so in terms of the buys that we did, so we bought Mara, NVIDIA, SPYT, Aptly, Robinhood, Soundhound, Coney, OARC, Squee, and AMZ. The unfortunate thing about buying a lot of the single stock ETFs from YieldMax is that the price of a lot of them plunged immediately after we bought it. So if we had just waited like another 30 minutes to an hour or a couple of hours, we could have got those cheaper prices. But is what it is. I mean, it's impossible to time these things. So we bought for the option stocks that we bought, Robinhood and SoundHound, we basically just bought 100 of each of those. So I'll go over these now. I'll start with OARC. OARC, unfortunately, has been tanking, but again, we don't really have a huge position here. So 18.48 shares at 1082. Go all the way down to Mara. So Mara, unfortunately, has been getting just walloped. I mean, CLSK and Mara, the Bitcoin miners, have just been getting smashed. Again, it's hard to say when the miners are going to go up, but in my opinion, I don't think they're really truly going to see all-time highs until Bitcoin breaks its all-time high at the end of this year. I think that's what's going to happen. Because you guys got to remember, there's going to be uncertainty about the presidency until the president is elected. In my opinion, it's going to be Trump. And then the uncertainty is going to be gone because markets hate uncertainty. So what are the markets going to do in November, December, and January? They're probably going to go up. So that's when I'm expecting Bitcoin to go to new all-time highs. So average price here at $23.49, 200 shares. I'll just scroll down here real quick. And it's showing the different options that we did here, but that's not what I want to show you. So 100 shares here at $22.30. Again, I kind of thought that was going to be a cheap price, but apparently not cheap enough. So, but like I said, I do think the market is just about done selling off for right now. I think it's been way too aggressive, way too fast, and I just don't see it continuing in the immediate short term. So right here, 7.55 shares of SPYT at 1986. Aptly, we did buy Aptly, but we also sold it. We got rid of it. So pretty much what we just did is we got rid of Aptly and put that aside in cash because, again, we kind of feel we like to have like a certain level of cash on hand at all times. Doesn't matter what it is, because if we ever see something like 2020 again, where where crypto drops 60%, the S&P drops 30%. The sell-off is short-lived, like it's only a couple of months. Well, it would be really hard to get the money mustered up in just a couple of months to be able to buy on that massive drop. Again, I don't think that happens, but you never know. So 21.16 here, average cost 100 shares on Robinhood. So you guys can pretty much guess what it cost us to buy this. So 100 shares at 21.16. I'm trying to find Soundhound here. Where is it? So we have 1,000 shares of Soundhound. Again, that should tell you how bullish we are on the stock. Unfortunately, Soundhound is just getting dragged down with the rest of the market. I mean, that's kind of what happens. You saw the sea of red that was going on before. So it just is what it is. When the market rebounds, this will probably rebound too. So 100 shares at 514. Coney, we finally got over the 200 shares. Something interesting to note about Coney and MSTY and NVDY, there is options that you can do on this, so you can sell covered calls on them. But for most of these, your strike price or your cost basis would have to be roughly about the strike price would have to be roughly about your cost basis. So $24.95, 208 shares here. And then we have 1081 at 1850, as you guys can see previously. And the last two we have here is Square and Amazon. So let me see if I can find those real quick. So 108 shares at 2030 here, and going down 8.21 shares at 1826. And then the last one is AMZ. Amazon, unfortunately, has been getting kind of smashed too, but I think Amazon's going to be one of the more resilient ones. Again, Amazon is one of those kind of companies like what is it called? Amazon Prime, I think it's called, where you can literally order something online and have it delivered to your door next day for free or for like a certain subscription fee or something like that. Somebody could literally order anything online, have it shipped to their door, and you could buy just about anything on Amazon. So I don't think I need to say more than that. So 111 and a half shares here at 22.52. And we bought just a little bit here, 2.64 at 18.91. So that's the buys that we had for the week. Now, in terms of options premiums, I'll go over those right now. So we have Mara, entry date 7/29, covered call, exit date 8/2, $43 times one contract, $10 to close early, so $33 total on premium. PLTR 7/30, covered call, 8/9, exit date, $98 times two contracts. 7/30 covered call, CLSK, 8/30, 2024. $43 times three contracts. We actually rolled that the CLSK covered calls out to 2026. So we basically just did a leap as a way to raise extra capital. If for whatever reason CLSK starts heading back to our cost basis, we'll just simply buy the contracts back. We're not too worried about it. So Mara 7/30 covered call, 8/9, 2024, $38 times two contracts. The premiums for Mara will be a lot more once the price goes back up. Generally speaking, the premiums for covered calls are greater when the price of the underlying stock goes up. So Robinhood 7/31 covered call, exit date 8/9, $83 times one contract, and Soundhound 8/1 covered call, exit date 8/30, $20 times one contract. So the total for the premiums comes out to $537. Again, options premiums are pretty good. In some cases, they're actually a lot better, even than these high-yielding dividend stocks. Depends on market conditions, but the total for the week is $924.65. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.